What's going on, everyone? Investor here. Got another fun video for you. This time we're going to take a look at JEPY from one of the Defiance ETFs. Distribution rate of 55.17%. So if you're new to the channel, please consider hitting that subscribe button. Give this video a thumbs up and hit that bell notification. I try to bring these videos out to you as often as I can, especially this new line here where we're talking about what if one share could equal X amount of money. So with the Defiance ETF, we're right here on the main webpage. We'll cover what they are, and then we'll get into the fun. And keep in mind, when I do these videos, these are strictly kind of the what if factor, just kind of letting your imagination run. Very high potential for a distribution rate, opportunity to make a lot of money. I'm talking about a lot of money if things stayed true the way things show on paper. So this is strictly just for the what if factor. So if it's believable that ETFs such as this from Defiance or the other ETFs such as Tesla and some of these other ones that have been coming out lately, if it's believable that we can sustain this kind of distribution rate and this type of dividend payments over a long period of time, I'm sure many of us would have jumped on board a long time ago. But when we do these videos, again, this is just for the fun, just for the sole what if. What if they could sustain it? What if that distribution rate or those dividend payouts stayed where they were? What if? So kind of just let the imagination run wild. So again, this is an investment that you really need to do your research on. This is something that you're going to be spending actual money on in hopes to make whatever money back. But it's still real money being invested in something real. So please do your own research. I am not promoting this. I am not a financial advisor. I'm just here to kind of show you the fun. So let's jump in. So JEPY, the first put-right ETF on the S&P 500 using daily options, or the 0DTE, which is the 0 days till expiration. So essentially selling call options that expire the very next day. So to seek enhanced income for investors paid monthly. Again, these monthly ETFs are a big incentive for a lot of people looking just to put monthly income into their pockets. So JEPY aims to achieve consistent and outsized monthly yield distributions for investors, coupled with equity market exposure to the S&P 500. JEPY is an actively managed exchange fund. Being actively managed means that there's going to be an expense ratio, and with this particular one, it is a 0.99%, so it is high. That seeks to enhance income constructed of treasuries and the S&P 500 index options. The strategy's objective is to generate outsized monthly distributions by selling option premium on a daily basis. Again, daily basis is how these guys are making their money. So a lot of risk, but a lot of reward potentially. So again, you've got to do your research. The fund uses daily options to realize rapid time decay by selling in-the-money puts with 0DTE. The investment objective. This fund's primarily investment objective is to seek current income. The fund's secondary investment objective is to seek exposure to the S&P, the performance of the S&P 500 index, similar to a limit on potential investment gains. So you see the net asset value there of $18.76. If it can sustain this as well as those monthly distribution rates, this could be a fantastic ETF. Only time will tell. Historically, we see some of these usually take a decent dip before they actually start to come back. You never know. So again, this is the what if. So you'll see the fund inception as of September 18th and the expense ratio of 0.99. Again, this is really high, so keep that in mind. So we'll jump over real quick over to Seeking Alpha, and you can see the dividend payout, 90 cents per share, and they've only paid out the 1 month because they've only been around September, so October being that first payments. But 90 cents per share, can you imagine? 90 cents on something brand new on an $18-something investment, $19 investment, whatever the share price is at the time of this filming. I think it was around 19 bucks. But still, 90 cents. Outrageous, right? So let's jump over to the calculator and let's have a little fun. Okay, taking a look. Dividend calculator here on MarketBeat. So again, guys, if you're not familiar with this, I've done several of these videos now. Please go take a look. That's going to see how things work, how the format works for these. But MarketBeat is free to use. And you just Google MarketBeat dividend calculator and you'll be able to find it. So if you start up here, you just type in the holding that you want, if that's what you're looking for. It may come up with some default things like this. It's going to say 0% annual dividend. And a lot of this stuff on here isn't quite accurate just because it's so new, it may not know. So you're going to have to change a few things in here. Distribution frequency. This is a monthly payer. The drip, of course, is what we want on. We'll start with the 1 share because that's what we're after. So share price $18.99. So let's say $100 a month, right? If you can put, you know what? Let's drop this one down. Let's just say $50 a month. Oops, that would be $600 a year. So $50 a month for a year, starting with 1 share. I believe it was 55.17% on the dividend yield that we've got to put in. Just leave the annual expected appreciation here for both the dividend and the share price. We'll leave that at 3. Just leave this at 20 years. So you'll come down, you'll hit the calculate dividends, and you'll see with 1 share. So essentially a $19 investment plus your $50 a month could equal $18 million. Unreal, right? Unreal. So let's drop this down. Let's just say you invest 0, right? You just buy the 1 share and just let that 1 share sit. If everything was to stay the way that it is on paper, with that distribution rate being the way it is, in 20 years, $19 becomes we'll call it $366,000. Not bad, right? So you can play around with any annual contribution, you can do whatever, but let's just go back to the $600. Let's just drop it down. Let's just, for fun. Well, let's say 300. So you're able to do $25 a month into this ETF. So essentially you're buying just over a share per month with your own investment. $9.4 million. Unbelievable, right? Now again, what if, right? But you never know. It could pan out. More than likely it's not. But what if? Even if you, like, I talked about in the other videos, what if you do this and it only pans out to be 25% of what you thought? Would you still take 25% of $9 million? I mean, who wouldn't, right? So scroll down. You can come down and you can see the chart here. When you're starting with your 1 share, you'll see you'll make $10.48 in dividends the first year off that 1 share. With your annual contribution, $300, means you'll have just under 17 shares at the end of the first year, right? And you'll just see the growth from there. So you come down to the 20 years, you'll end up with, we'll say, 275,000 shares, equaling $9.4 million. Unreal, right? Some of these things, you never know, right? Sometimes this is how the rich got rich, is by speculating sometimes and wonder about the what if. Sometimes you got to take that leap. But again, do your own research. You never know. So anyway, guys, this is just kind of what I want to show you. So the new JEPY ETF, it is poised to make you some decent money. It can. You never know. But what if? So please do your own research. Please look into the ETF before you make any actual financial investments. These videos here I do just for fun, just to show you what can possibly be done. There is obviously some opportunity to make some money. Whether it's $9 million, they have probably not, but it's still fun. So guys, please like this video. Please leave a comment what you think. If there's any other holdings or any other companies you'd like me to cover, I will definitely try to get those in. Again, please do your research, and happy investing.